The Fed raising interest rates by a quarter of a percentage point, expressing caution about the recent banking crisis and indicating that hikes are nearing an end. As we await Fed Chairman Powell's press conference, let's bring back Dennis Lockhart, former president of the Atlanta Fed, for his reaction to the Fed decision. As you kind of predicted, the vote was unanimous here.
Yeah, at least the consensus that came out of this meeting was quite tight. I think it's interesting to look at the dot plots, and I have to compare them to the December dots, but it looks to me like very tight consensus near term, but 24 and 25, you're beginning to see some divergence. So different views over the medium term of what could develop.
Sure, and I think that reflects, the fact that the macro has gotten more uncertain. Dennis, so is this the right move, or are they going to look back and go, why do we hike rates after we were having a bunch of banking crises when the leading indicators were rolling over and it was obvious that we were heading into a downturn?
Time will tell, Kelly. I think, this was very much a judgment call. And as I said earlier, I think it could have gone either way. And there are very good cases, or there were very good cases for either a hike of 25 basis points or a pause. So we'll see how things play out. You talked a lot with your panel just before the bottom of the hour about the word firming.
Right.
My sense of that is they felt they had to be less explicit given the uncertainty that we're facing. This is probably a big message that'll come through in Powell's press conference: uncertainty, uncertainty, uncertainty. And they just didn't feel they could go forward with the same language they had last meeting that was quite explicit. There likely to be more rate hikes. So they just toned that down a bit, made it a bit more ambiguous to buy them some flexibility.